for you, Mark. Often life and investing mimic each other. Transitions in life can lead to transitions in outlook, both financially and in concrete lifestyle choices. What transitions would you be anticipating over the next 3 to 5 to 7 years? Looking at the investment markets and choices to be made there, seeing transitions ahead, how do you make sense of what we're talking about and put it into concrete terms in terms of an investment strategy?
Well, I think if you take kind of a cyclical point of view, we had Don McAlvany and I got going in this business in the inflationary 70s, where stocks and bonds, your traditional investments, were not doing well, but asset-based gold, silver, Swiss francs, real estate, these hard assets that we call the inflation hedges, those were the big performers. And then in the early 1980s, you had Reagan come in, you had Reaganomics. There you saw the hard assets lose favor, and you had the return of the traditional investments, and that lasted for a good 20 years. Now I think the cycle is switching back again to this inflationary period where hard assets and inflation hedges are a key. And yes, you can make money in the stock market, but you have to be a more nimble individual investor and look for what companies, what industries will do well. And so I've been emphasizing more the natural resource sector, but also technology will continue to do well in this environment. But so I'm actually more bullish on the NASDAQ-type technology stocks than I am the big blue chips, which the Citibanks and others that might not fare as well. So I do think you're right, Kevin, that we see a need for a paradigm shift, if you will, in your thinking. You know, how do I deal with a constant inflationary environment because of constant government intervention? I will say that one of the dangers here is shorting the market and so forth. I have several friends of mine who have tried to short this market, and it's worked in the financial field, but now that the Fed is so aggressive in this area of bailing out and so on, I think that's a dangerous game. It's a much smarter play to buy gold, to buy silver, to buy oil and related stocks as a way on the bullish side rather than try to sell industrial stocks short.
Mark, I've got a question as far as past economic models, because you really are, you're known in the industry as just a brilliant economic historian. Do we have a model of situation occurring like it's occurring in the credit markets right now, and the government coming in and nationalizing, or like you all were talking about fascism? Do we have a model where we can see where this goes from here and if it actually works for a season?
Well, if you look at creative destruction model that Schumpeter and the other Austrian economists focus on, and Mises himself said the key to understanding the markets is who gets the money first. And so the Fed bailouts, who is that affecting? Well, you can see it. See big rallies in those failed industries, those failed markets. So the key is to be more of a deconstruct, if you will, the marketplace and look for individual sectors to make money rather than just depending on a broad-based buy the indexes. That's been the tradition, and that worked when you're in the traditional marketplace. That worked just fine. But now you have to look at where the niches are, where are the sectors that should do best, and the Austrian model is what we call a disaggregate type model. In other words, the other models are all aggregate type of things, but the Austrian model is we disaggregate the economy, and we look at sectors that might do better than others. So that's the model that I like to use during this time period.
Well, Dr. Skousen, we appreciate you joining us today. Our time is so short that we'd like to pick up on this sometime with you in the future. I want to recommend a book that I think you had told us earlier is going into a second edition for people who would like to improve on their understanding of some of the things you're talking about economically from an economic history standpoint. The book is called The Making of Modern Economics, and I think you wrote this first edition, 7 years ago?
Yeah, Yeah, in 2001.
Well, I got to say, it's probably one of the best economic primer types of books that walks you through each character. It's probably even more than a primer. It's a full textbook on what these men believed. But one thing that I liked about it was very personal in what it talked about, how not just what they believed, but how they thought, what formed their thoughts. And Mark, you even have musical selections at the beginning of each chapter so that people can really tie that in.
Yeah, it's kind of a symbol of each great economist. And the making of modern economics is illustrated. It's got lots of anecdotes, but most importantly, it tells the story of economics through the eyes of the great free market economist Adam Smith, the founder of modern economics. And so he's the heroic figure throughout the book. And you have the Marx. I got chapters on Karl Marx and on Keynes and other enemies of Adam Smith and his free market. But it's got a good ending at the end, and it's a book that a lot of people have really enjoyed. And in fact, I've had some people say it's on audio tape as well, and they've listened to it or read it 3 or 4 times. So it's something every author wishes that they could write a book, and I think this is one of them.
Well, Mark, what would be the easiest way for our listeners to get a hold of that book?
Yeah, I think Amazon's the best thing. It's called The Making of Modern Economics. If you just go to Amazon.com, you can get a hardback or paperback copy.
You've been listening to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany. Join us each week at McAlvany.com, McAlvany, or call us at 800-525-9556.
This has been the McAlvany Weekly Commentary. The views expressed should not be considered to be a solicitation or a recommendation for your investment portfolio. You should consult a professional financial advisor to assess your suitability for risk and investment. Join us again next week for a new edition of the McAlvany Weekly Commentary.